Hey, what's up traders? In this video we will look to the COT. So those who knows me, you know I released my Excel sheet to my website. So if you go to my website fxhunterwell.com and you click to the COT, it will takes you in here where you have to fill up your email. Please do your email, don't do my email as many people is doing. This email will be blocked, so you must put your email. You fill it up, you click to the send, and it will takes you to this website where you can see the retail traders positions, which is explained in the other video. Right now we will check the COT, so I'm going to click to the COT, and here we will see these COT data, of course, as you know from my Excel sheet. And here's a couple of things what we can do. We can of course set up the history, for example, for the 10 years, which will change the calculations of the maximum positions, and the extremes. Of course we can set to the 3 years and it will be different as well. Here on the bottom we can see the relationship between the commercials and non-commercials, and we can as well show up the positions and check how it's all changing in this relationship. Here on the bottom we have the shortcuts. For example, if we click to the euro, it will of course take us to the euro USD. So as well, the last thing maybe to explain is if I click to the euro Aussie, it will brings me the euro and Aussie, and I can compare these two pairs, which I think is pretty cool. What else we can do here is of course to watch the longs, shorts, total percentage exposure, net positions, and change. That's all what I need to follow the bank's positions. This was all very cool, and it's still very cool. And actually as the data are released every Friday after the New York close session, it's updated on my website, and every Saturday morning the first thing what I'm going to do is to check the positions, what happened, and how can we benefit on that in the next trading weeks. It's pretty long-term process to understand all of this. However, if you will work on it, you will find out. But what I wanted to do, I wanted to simplify that. So what I did is that I have made with my coder, we have made this amazing calculation, which is taking which is measuring the net positions, the change, average volume, and other things, the long, shorts, the coefficient. It's actually putting all the currencies to the same weight, and it's bringing the one number, which is the scoring for the how bullish or bearish is the market. And this number is actually shown in the platform, so we will look at it right now. So this is the euro USD. Here is some trade which I was explaining in some previous videos, so I'm doing the videos right now. So what we want to do is to click to this volume, and it will show us the COT tool. So basically what do we have here? We have these arrows. These arrows are showing where the COT data was reported to the CFTC. It's the difference. Now please bear with me, because there is the two things. When the data was reported by the big players to the CFTC, and there is the other date where the data was published to the public, which is mostly on the end of these rectangles, which I don't know why disappeared currently. For some reason now it's back. So what's actually showing me this? So I can see this. I have to explain because many people are confused. For example, right now in here, in the 9th of June, the data was reported to the CFTC, and on the Friday in here, they've been released, right? they've been published, sorry, so reported and published. That's why I have these rectangles. Then what I have here as well is this big red one rectangle with this distance is about to how long I know about these data, how long I can calculate with them, because here was the data reported and I know about them until here. Here was the published, and I know about this data until here, because the next data was again on the Tuesday reported, and here they've been published, right? So it's might a bit confusing, but I must repeat this again. So here the data are reported, here are published, right? So here we will receive the data to our Excel sheet. So we will look at it. So this is the 9th of July, which is here. It was reported on the Tuesday, but here it was published on the Friday, right? Next, we don't know what's gonna happen. We don't know what's happened actually with the positions in here, because this report is actually for this previous period, right? So what is reported in here happened in here in this period. This is very important as well, and this what happened in this period was published here, right? Then we don't know what happened in this period, and that what happened in this period since last report to the next report was published in here. So that's why I'm using these rectangles. And it's very important, because sometimes people ask me, hey, look, they adding the longs positions, they added longs positions, it must be bullish. All right, they can add the positions, but look, for example, here is the report where you can see they added the positions. Of course they added the positions because they bring the price up, but the data was released here, published. So you actually looking what happened in this period, that there was added the longs, but it's published in here. These longs could be already closed, right? And it's important to know how to read correctly the COT data, because there is a big difference when the data are reported and published, because we are always with slightly delay. So for example, look at the current data, right? So we have the 30th June, which is here. So here the latest data was reported, and it's for this data, for this period, right? For this period, what happened in here, and we can see that the banks has reduced some longs positions when they did the report here. Of course they reduce some positions because they bring the price up, and then they close, then they started to close the positions in this report, and here they report that they close the positions, right? What else we can see, they started to add the shorts positions for last 3 weeks. So they basically building their shorts while they moving price up. Anyway, I will not confuse you with this right now. So this is to explain what these rectangles are right now. So again, look at this. So this is the data, the latest data we have is from the 30th July, which was reported to the CFTC here and published to us in here, right? But we still don't have the data for this period, right? So what happened, basically what happened in this period from the latest report to this Tuesday will be reported this Friday. So if in this Friday we will see the banks are building the shorts positions, so we would probably, which I think we might see, that they added the shorts positions while the price was going up. That means that they're building the shorts positions. But as said, this is very important. So this Friday, which is actually today, we will have the data, I don't know, for example, in here, it will be released. Today data which will be released will be for this period, from this arrow to this arrow. But what happened on the Wednesday, Thursday, Friday, we again don't know. So we don't know what's happened on the Wednesday, Thursday, Friday, and actually Monday and Tuesday, when will be the new report, and it will be published on the Friday. This is very, very important to know, and this is how you can read and predict what they are doing. Next, with the mix of the volume where they trade, you will be able to predict what they are doing. So this is basically what my indicator is showing. When the data was released, it's showing the arrows, and these rectangles is showing the when the data was released and published. Of course, the banks, they are doing the tricks because they know that we are watching this, that we have our Excel sheets or some our tools which can show us all these things. So what they basically mostly do, they are trying to hide their intention, right? So most likely what happened here in this period, what could probably happen is that, let me bring the different color, right? So we can, know what we are talking about. So what they probably did, if you look at it like that, and if we think they want to short, so what they probably did, look, they was moving the price up, right? We can see there was not much volume. The volume was decreasing. So and it was increasing on the top. So they was probably building some shorts. But look, before the report, they dropped the price down. So they closed these shorts. Maybe they added some longs to bring the price up again, right? And they shorted again here. Why they did it? To bring it to the liquidity zone where the people start to think it's bullish. But so what do we will see in the report? We will probably might see that they added the longs positions, because they been probably adding the longs positions here to bring the price up. But does it mean the banks are bullish? Of course not. They only manipulate the report, and they probably closed their shorts before this happened, and they make it again. So in this report we might could see the longs, not the shorts yet, and the shorts will be seen probably the next week when they will be reported, and published. So we will know about this actually the last week, but the next week, but the price probably will be already somewhere down, and they doing this to hide their cards as long as possible. So you basically must be able to read what they are doing. It's like a chess. You need to be able read it in couple steps in the advance. Next thing what this indicator is showing us is this. So we basically can see the exposure. So we are seeing they are 72% to the longs against the shorts. We can see the net positions. We can see the change. If you look at this one, we can see they are only 68% to the longs. So they basically reduced their longs positions, right? So we can see 72, 5, 62. So we are seeing overall the exposure is reducing their longs positions. That's what as well this number is showing. So we can see they've been extremely bullish here, and they then drop it down, and we are not so bullish in here. I'm not sure if I have shown this, but I will show it again. So basically this calculation, not this. This calculation what I have here is bringing me this one number. So as said, I'm sorry, I'm not sure if I show it on this video, but I will say it again. So I'm sorry if I'm saying it again. So here I'll calculate with the net positions, net position change, average change, total volume, and all of this, which is actually the making all the process a little bit easier for me to see the changes and fast speed of the changes. So we can see that they reduced really sharply from the 11, which is very bullish, to the 0, which is turning to the bearish, right? So let me bring this back again. Let me click on this, right? So we can see they are really changing their exposure here. And on the other side, there is as well the retail traders average price. And look what's happening here. This is the retail traders average price, and they still catching them into the trap, and always they give the chance and then they reverse it. So they basically hunting the liquidity in here, and I think we will see soon some bigger reversal. Let's see. But this retail traders I will explain in the other video. So this was about to COT. And the last thing what I want to say about this is many people thinks it's like you know, holy grail or whatever, and if they see something in here like a percentage changing, that it's like you know, showing red going shorts, showing blue going long. It's not that easy. I mean, you have to learn to read between the lines, and it's really the art to learn this understanding of the markets. But once you do it, and there is no any shortcuts, you must really dig deep into it and watch this. So and test this. So what this my tool as well gives you, you can see where was the releases, and you can watch it. You can, for example, find this date here on the 26th February, and you can check what happened with the positions, how they closed so big shorts positions. In here you can see this. Oh, sorry, it's not on the on the recorded area. So for example, here you can find what's happening here. You can see that why the price moved up, because they closed such a big amount of the shorts positions. That's why it moved up. And you can basically, if you're going through these arrows, comparing it with complete the history in here, you will understand it much more. So you must spend your time with doing this, and I can guarantee you it's worth to do it. You have now chance to learn something what can change your life forever, and you have this tool in here. All right, my friends.